Hello everyone, and welcome back to Trading Club 7U. Today we're going to dive deeper into the world of candlestick patterns, and explore one of the most interesting and misunderstood patterns, the Doji candle. If you're new to trading, you might have come across a Doji candle without really knowing what it means. It's like trying to solve a puzzle without all the pieces. But don't worry, by the end of this lesson, you'll be able to recognize a Doji candle like a pro and use it to make better trading decisions. So, let's get started with the basics. A Doji candle is a type of candlestick that indicates market indecision. Imagine two people having a debate, neither willing to give in. As the conversation goes back and forth, the price of a stock starts to move up and then back down, or vice versa. It's like a seesaw, where neither side has the upper hand. Now, let's get a bit more technical. A Doji candle has an open and close price that are very close, sometimes even the same, with very little to no body in the middle. In other words, the price of the stock didn't really move much during that time period. To be considered a Doji, the open and high prices must be very close, and the same goes for the low and close prices. To give you a better idea, imagine this Apple stock's close at 100 at the end of yesterday's session. Today's opening is also at 100, and then the stock price goes up to 110, but it comes back down to 100 at the close. That would be a Doji candle. But, here's the thing, a Doji candle doesn't tell you what will happen next. It's not a prediction tool. Instead, it highlights market indecision. It's like a traffic stoplight. You see it and wonder if it's green, yellow, or red. Will the price go up, stay flat, or go down? Now, let's talk about some common mistakes beginners make when it comes to Doji candles. Sometimes they think that a Doji means the price will just reverse. While that can happen, it's not what it usually indicates. A Doji can mean that the trend will continue, or it might just mean the market is taking a break. You see, many traders get caught up in what's called confirmation bias. They see a Doji candle and think, the price is going to reverse. But in reality, it might just be the market taking a breath before continuing in the same direction. So, when you see a Doji candle, take a step back and try to understand what's really going on. Here's an example to illustrate this point. Imagine that you're trading a stock, and it's been trending upwards for a while. You see a Doji candle at the top of the trend, and you think, the price is going to reverse. But in reality, the Doji candle might just be a sign that the market is taking a break before continuing the upward trend. Another mistake beginners make is not considering the context of the Doji candle. They see a Doji and think it's a standalone pattern, but in reality, it's just one part of the bigger picture. You need to look at the Doji candle in conjunction with other technical indicators and fundamental factors to get a complete picture of the market. So, let's practice what we've learned. Go back to a chart, or take out your paper trading journal, and look for some Doji candles. Notice how they appear after a trend, and what the market does in the next few sessions. Ask yourself, is the market indecisive, or is it trying to decide which way to go? Remember, a Doji is just one tool in the toolbox. It's not a magic indicator that tells you what to do next. For homework, I want you to find 3 Doji candles on a chart, and write down what you think is going on in the market at each point. Ask yourself questions like, is the market indecisive? Is the trend going to continue? Is the market taking a break? And most importantly, don't make any trading decisions based on the Doji candle alone. Take a step back and consider the bigger picture. Before we wrap up today, let me remind you that trading is a risk, and there are no guaranteed profits. It's essential to practice with a demo account or paper trading before risking real money. In our next lesson, we'll be exploring the hammer and shooting star formations. Stay tuned, and as always, thanks for watching the Trading Club 7U. Remember, trading is a journey, And the first step towards becoming a successful trader is to be honest with yourself and acknowledge that you don't know everything. So, keep learning, stay humble, and always be willing to take feedback from others. Your trading career depends on it.